There's good news for homeowners going into the new year. A new survey says the value of capital city and regional homes has risen for the first time since 2010. That's thanks to the Reserve Bank's decision to cut interest rates. Analysts, though, are split over how long property values will continue to climb.
Homeowners have reason to celebrate the new year. After watching the value of their investments drop for 11 months, they're now ending the year on a high. A new survey shows home values in capital cities rose by 0.1% in November and 3 times that amount in regional areas.
We're projecting a solid rebound in activity in the first quarter, and we think that overall prices will rise between 4% and 6%.
The Reserve Bank's 2 interest rate cuts before Christmas appear to have been the key to unlock the door for investors.
At present, things look as though they're relatively stable. It does look as though things are about to turn, though, and it's now the time for investors to be able to get their paperwork in order.
In the 3 months to November, the best results were in Darwin and Canberra. Home values were weakest in Melbourne and Brisbane. The best return for rentals was in Darwin, the lowest in Melbourne. But for home buyers, capital city home prices are still cheaper now than they were a year ago. The average Australian house price is now around $540,000, a unit about $458,000. The gap between them shrinking to a 5-year low. The latest outlook is at odds with some analysts who predict more pain for the housing market, despite predictions of even lower interest rates.
It's absolutely silly to have 11 months of negative falls and 1 month of positive, and on the basis of 1 month of positive predict rising house prices for the next year. That's not analysis, that's wishful thinking.
Investors have been reluctant to borrow more over the past year. The RBA's latest housing credit figures show annual growth has slowed to around 6%.
As the level of mortgage debt falls, over time house prices will go down with it.
Because if no one's borrowing, no one's buying. Kylie Simmons, ABC News, Sydney.